Investing for the New Generation. Presented by 100K Investing, LLC. I strongly encourage you, once we get into the flow, to take notes. Write them down, type them up, whatever works for you. Who is the founder? Eddie Starr is a U.S. Navy veteran of Operation Enduring Freedom. Many, when in the military, have their war stories. This is one of his. He arrived at his base on September 7, 2001. September 11th happened, and things became interesting. He was the only new person in his division, and they didn't have a lot of time to continue processing, so the day was his. On base, almost everything was closed, due to the heightened level of security. He was considering going off base, to explore town, but when he got to the gate, there was a huge crowd of Japanese protesters, which he took to be those protesting the U.S. military base there. The Japanese military that they shared the base with, had the entire entrance blocked, and in full riot gear. So, he decided not to go into town, at that time. Today, he's a businessman. Before we go into who he is, in this regard, let us tell you a bit of who he's not. He's not your father's brother's nephew's cousin's former roommate. He may, however, be a bit of a spaceball. Be sure to watch that movie. If you remember Bill Murray, in Groundhog's Day, also not him. He's not the god, or even a god. He won't have all the answers. What he doesn't know, he will make every effort to get you those answers. Some government oversight. General solicitation. Establishing pre-existing and substantive relationships. SEC Guidance General Solicitation. Rule 502 promulgated under the Securities Act of 1933, as amended, prohibits an issuer from offering or selling securities by any form of general solicitation or general advertising when conducting certain offerings intended to be exempt from registration under Regulation D. Raising of capital for real estate investing, business startup. Be aware of SEC guidelines. Don't do a general solicitation. Pre-existing and substantive relationships. Pre-existing, the relationship was formed prior to the commencement of the securities offering. Some suggest a minimum of 3 prior contacts. Substantive, when the issuer has sufficient information to evaluate, and does in fact evaluate, a prospective offeree's financial circumstances and sophistication. If the presentation does not discuss the securities being offered, the securities laws are not implicated. Laws are always changing. What options do I have for investing? Retirement accounts. 401k, 201k. IRAs, Roths, MIRA. And so on. Equity in your home. Cash out to refinance. Home equity loan. HELOC. It's all about leverage. Retirement accounts. As you know, a management company manages your retirement account. These companies often have their own products, mutual funds, that they sell, for your account to invest in. You're not limited to mutual funds, or the stock markets. You can have a self-directing IRA. As the videos in prior parts showed you, there are a wide variety of options, and you should want your retirement account to be diversified. U.S. news story estimates $2 trillion were lost in retirement plans that were just investing in stocks. Other investments include precious metals, real estate, and businesses. Self-directing IRAs, SDIRAs, and Solo 401k. Mountain West IRA. U-Direct IRA. Search online for SDIRAs. In some circumstances, you could have a Solo 401k. Solo 401k is for owner and spouse-only businesses or those with part-time employees only. You can contribute from the business, and as an employee, just like traditional 401k. Like the SDIRA, you can invest in real estate, gold, etc. Cash out refi allows you to lower your current mortgage interest rate and capitalize on a lower total rate than a home equity loan or HELOC. You only have one loan and one payment. The interest charged on this loan may be tax deductible. Your first mortgage is reset, potentially adding extra years to the term until it is paid off. You must borrow all the money at once and begin paying it off immediately every month. The closing process can be lengthy, and closing costs can be as high as 7% of the total loan amount, although you can choose a no closing cost option that bundles closing costs into a higher interest rate. Home equity loan leaves your first mortgage alone. Acquisition costs are typically lower than for a cash-out refi. Interest charged on this loan may be tax deductible. The interest rate is typically higher than for a cash-out refi and fees are often higher than for a HELOC. HELOC. The interest rate is often lower than for a home equity loan. Easier and quicker to secure due to fewer lending restrictions. You only draw the money when you need it and pay no interest on it until you do. The interest rate is adjustable and can rise at any time, resulting in higher payments due. Which is best? HELOCs tend to be the easiest and simplest to obtain because they are not subject to Dodd-Frank rules or truth in lending regulations. Equity loans are the next simplest, but sources are more limited and they tend to be expensive. Cash-out refis are the most complicated to get, but are good if you don't have a great mortgage already because they are the least costly option in the long run, in most cases. Pros of REI. A tangible asset. Physically see and feel your investment, can't with others, like stocks. True value no matter the economic health. People need homes to live in, and businesses need places to conduct business. Efficient markets don't truly exist. If you are familiar with your local real estate market, you can easily identify deals and invest in them. You can network with existing investors to help find deals. Cons of REI. Not liquid at all. Unlike the stock market, real estate investing is not a quick buy and sell atmosphere. Steep learning curve. Beware the gurus and infomercials that promise six-figure incomes overnight. If it was easy, everyone would be doing it. Significant liabilities. Taxes, repairs, maintenance, finding motivated sellers and buyers unless you're the buyer, competition from those who bought the latest guru training. REI samples. Listed 990,000, gross 98,000, expenses 21,000, net 76,000. Listed 395,000, gross 57,000, expenses 14,000, net 42,000. Listed 525,000, gross 74,000, expenses 45,000, net 28,000. Pros of investing in an existing business. The brand or service has been marketplace tested. Comes with an established customer base. Existing staff are already trained and knowledgeable. Policies, procedures and practices are already established. It's usually easier to finance a business purchase than a startup. Can begin working immediately on growth and improvement. Start turning a profit sooner than with a startup. Cons of investing in an existing business. Higher initial cost. Possible staff problems. Fixing problems with an established business. Getting stuck with existing policies. Making it your own. Business samples. Asking $26,500, gross $67,606, cash flow $41,719. Asking price $149,500, gross $826,824, cash flow $197,090. Asking price $199,999, gross $2,568,707, cash flow $330,000. That concludes this call. I hope this information was helpful to you and has given you some more information about investing. If you still have questions, please feel free to email us at either admin100kinvesting.com or 100kinvestingconsultant.com. Please include your name, your industry, a number to reach you at, and your questions comments.